Next problem, problem 3. Mr. Srinath, resident, is employed by ABC Company Limited. He submits the following particulars of his income and expenditure for the previous year 18-19. Compute his total income. So again, they have asked to calculate the total income. The first one, income from salary, they only given the directly. So take 6 lakh rupees as an income from salary. Next, income from other sources. Again, they have given the amount to rupees 2 lakh income from other sources, and they are not given any other aids income, that is house property, capital gain, and business or profession. So gross total income will be 6 lakh and 2 lakh, total 8 lakh. Next, deductions they have given own contribution to NPS. So this amount can be claimed as deduction under section 80 CCD subsection 1B. Next, own contribution to PPF rupees 2 lakh. So here have contributed to PPF, so it can be claimed as deduction under section 80C, but it is restricted only for 1,50,000. Here he has contributed 2 lakh rupees, but maximum up to rupees we can claim, that is 1,50,000. Next, deposited in notified annuity plan of rupees of LIC rupees 5,000. So this one can be claimed as exemption or deduction under section 80CCC. So let us see the problem. Assessee Mr. Srinath, status resident, previous year 18-19, assessment year 19-20, trading calculation of total income. The first one, income from salary 6 lakh rupees, income from other sources 2 lakh rupees. So total 8 lakh. That 8 lakh will be called as gross total income because we don't have any other heads. Next, from that we need to claim the deductions under section 80C to 80EU. First one, deductions under section 80C, that is one contribution to PPF. They have contributed 2 lakh rupees, but it is restricted only for 1,50,000. So 2 lakh or 1,50,000 maximum, whichever is less, 1,50,000. So we have taken 1,50,000 as a deduction amount under section 80C. Next, deductions under section 80CCC, because they have contributed amount or deposited amount in notified annuity plan of LIC, and it is exempted up to maximum of 1,50,000. So amount contributed is 5,000, maximum is 1,50,000. So lesser value is 5,000. So we have taken as deduction. Next, deduction under section 80CCD, because he has contributed to the NPS, that is notified pension scheme. So first we need to claim the additional deduction under section 80CCD subsection 1B up to rupees 50,000. But he has contributed 40,000, up to 50,000 we can claim the deduction. So directly entire amount of rupees 40,000 we can claim as an deduction under section 80CCD subsection 1B, and that 40,000 will not be included in the total of all the three. Okay, so the total amount is 1,50,000 and 5,000. So amount maximum deduction is 1,50,000 plus 5,000 will get 1,55,000. Be careful, this 40,000 will not be included in the total of or ceiling limit of 1,50,000 when we are totaling the three sections. Okay, so 1,50,000, 80C, 80CCC, 5,000. So total is 1,55,000. So maximum up to we can claim 1,50,000, whichever is less. So lesser value is 1,50,000. So amount deduction is 1,50,000. So gross total income is 8 lakh. So deductions amount 40,000 minus 40,000 minus 1,50,000 will get 6,10,000 as a total income. So be careful, whenever we are totaling the amount of all the three sections, the additional deduction and employer's contribution should not be included for the total of the sections. Excluding that, we need to take the amount and it has to be compared with the maximum of 1,50,000 and the lesser amount has to be taken as deduction. So total income is 6,10,000. Next, we'll move on to problem 4. Deductions under section 80D. So calculate the maximum deductible amount under section 80D of Mr. Dravid, resident from the following details. So first one, medical insurance premium paid on own life, rupees 10,000. So if any medical insurance premium which has been paid by the assessee, there under section 80D, we are going to classify it into two parts. What is one? It is called as insurance, that is medical insurance premium paid for the family members, and medical insurance premium paid for the parents. So if any family member is less than 60 years, up to 25,000 we can claim as an exemption. Maximum amount is 25,000. And if any family member is more than 60 years, that is senior citizen, then up to 50,000 we can claim as exemption. And in case of parents, if any of the parents, either it may be mother or it may be father, any of the parent is less than, or both the parents is less than 60 age, then we can claim up to 25,000. If any of the parent is more than 60 years, that is called a senior citizen, then up to 50,000 we can claim the exemption amount. Okay, so here first one, we need to segregate it into two parts, that is in case of family members and in case of the parents. So first, medical insurance premium paid on own life 10,000, so we can take it as an deduction. Next, medical insurance premium paid on is on wife's life, not dependent upon taxpayer, rupees 4,000. So even though if she is not dependent, she is a family member, so it will be considered. And next, medical insurance premium paid on son's life dependent to 1,000 rupees. So because he is independent, so it can be considered. And next, medical insurance premium paid on dependent daughter's life, rupees 1,000. And even she is a dependent daughter, so it will also be considered. So total from the family members, 10,000, 4,000, 1,000 and 1,000. Next, in case of parents, medical insurance premium paid on father's life, age 60 years, resident in India, not dependent upon taxpayer, rupees 1,000. So be careful, he is paying the medical insurance premium for the father's life and his age is 60 years, 8 years, 68 years, means which is more than the 60 years. So he will be called as senior citizen. So amount is 1,000 rupees. Next, medical insurance premium paid on mother's life, age 54 years. So it is less than 60 years. So she is not a senior resident. Resident in India, rupees 40,000. So first, we need to check whether any of the parent is more than 60 years or senior citizen. So in such case, up to rupees 50,000 we can claim the exemption. Means we need to total the amount of the parents, that is father and mother, amount medical insurance premium paid, and that amount, if any of the parent is more than 60 years or is a senior citizen, and that amount has to be compared with the maximum limit of 50,000, whichever is less has to be claimed as deduction. So 1,000 plus 40,000, totally 41,000, and maximum amount is 50,000. So in such a case, we can claim the exemption under section 80D up to rupees 50,000. And last one, medical insurance premium paid on grandfather life, rupees 2,100. So here they have given the grandfather, it will not be considered as a family. So we are not going to consider the premium paid for the grandfather. So under the section 80D. So take the assessee, that is Mr. Dravid, assessee Mr. Dravid, status resident, previous year 1819, assessment year 1920. So heading will be calculation of deductions under section 80D. So first, in case of family members, so medical insurance premium paid on own life 10,000, life wife 4,000, dependent son 1,000, dependent daughter 1,000. So total insurance premium paid, medical insurance premium paid is for family member 16,000. So all the members are less than 60 years, so up to rupees 25,000 they can claim the exemption. So amount deduction is amount paid, premium paid is 16,000 or maximum up to rupees 25,000 they can claim the exemption, whichever is less. So the lesser value is 16,000. So 16,000 will be the deduction amount. And in case of parents, that is medical insurance premium paid on father life, age 60 years, means he is a senior citizen, resident in India, not dependent upon taxpayer. So amount is 1,000. Amount is 1,000. And medical insurance premium paid on mother life, age 654 years, which is less than 60 years, means she is not a senior citizen, 40,000. So if any of the parent, either it may be mother or it may be father or both, if any of the parent is more than 60 years, or we call them as a senior citizen, in such a case, we can claim insurance premium deduction up to rupees 50,000. If both the parents are less than 60 years, then the maximum limit will be extended only to 25,000. So total premium paid is 1,000 plus 40,000, that is 41,000, or maximum 50,000, because one of the parent is senior citizen. In case of senior citizen, the maximum limit is 50,000. Whichever is less, that is 41,000 is the lesser value. So deduction amount is 41,000. So we need to calculate the total deductions under section 80D. Total deduction amount is 16,000 in case of family members. In case of parents, 41,000. The total deduction is 57,000. Next, and they have given the note that for medical insurance premium paid on grandfather life is not deductible because we not consider him as a family member. Next, problem 5, 80D, 80DD, 80DDD. Mr. Sudhir, resident, gives the following details for the previous year 2018-19. Compute his net income for the assessment year 1920. So they have asked to calculate the net income. So that is nothing but total income. So let us check what are the information they have given. First one, business income. So they have given the business income. Second one, any other income source. That is called as any other sources. And they are not given any other information regarding the other rates. So 8 lakh plus 80,000, 8 lakh 80,000 will be the gross total income. Next, we'll see the deductions amount. First one, medical claim insurance premium paid on 20th 4 2018 is previous year to general insurance company on the life of his dependent father. His age is 87 years and he is resident in India, rupees 8,000. So since he is a senior citizen, up to rupees 50,000 he can claim the exemption amount under the section 80D. Okay, so any insurance premium paid by the assessee for the parent, and if that parent is more than 6 years, we call them as a senior citizen, and up to rupees 50,000 they can claim the exemption amount. Next, expenditure incurred during the previous year 2018-19 on medical treatment of his dependent grandmother, being a person with disability. Expenditure is recovered from the general insurance company, rupees 73,000. So any expenditure which has been incurred by the assessee for the treatment of dependent disability person, in such a case that amount can be claimed as deduction under section 80DD. But the person called as the dependent is grandmother, so the grandmother will not be considered as a family member, so we are not going to claim the deduction amount. Okay, only for the dependent family members they can claim the deduction. Next, expenditure incurred on medical treatment of the dependent mother. Her age is 65 years and she is resident in India during the previous year in recognized hospital who is suffering from disease. However, amount is recovered from the insurance company is 70,000. So it has therefore expenditure is 80,000. So any expenditure which has been incurred by the assessee for the medical treatment of the family members can claim the expend or the exemption or deduction under section 80 DDB. Okay. In case of family member, if they are the senior citizen, up to rupees 1 lakh they can claim the exemption only if they are the resident of India. Okay, if the family members are resident in India but their age is less than 60 years, then the maximum amount is rupees 40,000. So the condition says that if the family members and if any assessee has expended the amount for the medical treatment and the family member is less than 60 years and they are the resident of India, up to rupees 40,000 they can claim the exemption. And if in case if the family member is more than 60 years, that is called a senior citizen, and if he is a resident in India, up to 1 lakh rupees they can claim the exemption. But if the family member is more than 60 years, that is senior citizen, but is not a resident in India, up to 40,000 only he can claim the exemption. Okay, so actual expenditure is incurred by the assessee is 80,000. So maximum, since she is a senior citizen and she is in India, so up to rupees 1 lakh they can claim the exemption, that is 80,000 or 1 lakh, whichever is less. So lesser amount is 80,000. From that, he has recovered the amount from the insurance company, there is 70,000. So 80,000 minus 70,000, the balance amount 10,000 will be claimed as deduction under section 80 DDB. Okay, next, expenditure incurred on medical treatment of dependent mother or expenditure incurred on medical treatment of dependent sister who is suffering from specified disease in a recognized hospital. However, the amount is received from the insurance company, rupees 30,000. So here they have clearly stated that she is a dependent sister and sister will be family member. And she is a resident and her age has not been specified. So it is assumed that it's in less than 60 years. Now the maximum amount up to 40,000 we can claim the exemption. Means 80,000 is the expenditure amount. Maximum up to rupees 40,000 we can claim the exemption. So 40,000, whichever is less, that is 40,000 will be the amount. From that, the amount recorded from the insurance company is 30,000. So the balance amount 10,000 will be claimed as deduction under section 80 DDB. Next, expenditure incurred on medical treatment who is suffering from special disease of his brother. So they have given the brother, he is also family member. His age is 65 years and he is non-resident in India. So be careful, even though his age is 65 years, senior citizen, but he is non-resident in India. So in such a case, the maximum amount restricted only for 40,000. Only in the case of senior citizen, and if he is a resident of India, up to rupees 1 lakh they can claim the exemption amount. So amount is restricted is 40,000. So deposited expended amount is 45,000. Up to 40,000 only can claim the exemption. So lesser amount is 40,000. So from that 40,000, he has already recovered the amount from the insurance company, that is 35,000. So balance 5,000 will be claimed as deduction. So let us see the solution part. Assessee Mr. Sudhir, status resident, previous year 1819, assessment year 1920. Heading calculation of net income. First one, business income, that is 8 lakh they have given. Any other income 80,000. So total will be gross total income, that is 8 lakh 80,000. 8,000. From that, we need to minus the deductions under section 80C to 80U. So first one, they have told that medical insurance premium paid. So insurance paid is 8,000, but up to 50,000 we can claim the exemption. So lesser amount is 8,000. So deduction amount is 8,000. Next, deductions under section 80 DD. Grandmother does not come within the definition of dependent, therefore nothing is deductible because he has incurred the expended on the grandmother. She is not given in the definition of family member, so the amount will not be claimed as deduction. So amount will be nil. Next, deductions under section 80 DDD. First one, expenditure incurred on medical treatment of dependent mother. So he has expended up to rupees 80,000, but she is a senior citizen and resident of India. So up to rupees 1 lakh we can claim the exemption. So whichever is less, lesser value is 80,000 and 70,000 has been recovered from the insurance company. So balance 10,000 will be claimed as deductions under section 80 DD. Triple D. Next, second one, expenditure incurred on medical treatment of dependent sister. So he has expended amount of rupees 80,000, up to 40,000 only he can claim the exemption because she is not a senior citizen. Even though she is a resident of India, but she is not a senior citizen. So in such a case, only 40,000 will be claimed as maximum limit. So 80,000 or 40,000, whichever is less. So lesser value is 40,000. From that, minus 30,000, that is amount recovered from the insurance company. So balance amount is 10,000. Next, expenditure incurred on medical treatment who is suffering from the special disease of his brother. So even brother will be including the family member, and he is a senior citizen, but he is not a resident of India. So in such a case, if he is not a non-resident or if he is a non-resident, only 40,000 will be claimed as exemption or deduction. So actual expenditure is 45,000, maximum up to rupees 45,000 they can claim the expenditure or the exemption amount because he is a non-resident. So lesser, whichever is lesser, so lesser value is 40,000 minus amount recovered from the insurance company is 35,000. The balance will be 5,000. So from that minus the deduction amount 5,000 plus 10,000 plus 10,000, 25,000 plus 8,000. So total amount has to be taken. It has to be deducted from the gross total income, 8,80,000. So net income or total income will be 8,47,000. Next, we'll move on to problem 6, 80D, 80DD, 80G, 80G section. So problem, Mr. Rama, a resident assessee, runs a business in Bangalore for the previous year 18-19. Disclose this taxable income as below. First one, business income 1,55,000. Long-term capital gain 25,000. Short capital gain 15,000. Next, he has hired furnished house for his own use and pays rupees 4,000. His wife has her property for residential purpose in Mysore of rupees or of 4,000. So here the assessee as paying the rent of rupees 4,000, but if you check the problem, he is staying in the Bangalore, and in the Bangalore he is paying the amount for the house property of rupees 4,000 per month. So the condition says that whenever the assessee is staying in a rental house property in the place where he is paying the rent to the house property without getting the benefit of HRA, and in the place where he is staying and where he is paying the amount if he is not having the own house property. So then the condition says that he can claim the exemption under section 80GG. So the conditions of the 80GG says that whenever the assessee want to claim the deduction under section 80GG, he need to pay the rent amount. And whenever or wherever the place he is staying, he should not have hold or he should not hold the house property either by the assessee or the wife or the sons or daughter name. And he should not get the house rent allowances. Here they have not given the information regarding the house rent allowances, but they have told that his wife has her property for residential purpose in Mysore for rupees 4,000 per month. So if you check, the house property has been situated in Mysore, but he is located in or he is staying in the Bangalore. So only if he having the house property in Bangalore, then he is not eligible to claim the deduction under section 80GG. But if he is having the house property other than the place where he is staying, then he can claim the exemption under section 80GG. So exemption under section 80GG will be 25% of the gross total income, adjusted gross total income. Next, by a maximum up to 5,000 per month, you can claim the exemption. Rent paid minus 10% of the adjusted gross total income. List of the following will be taken. So just we'll go to calculate. Next, if paid donation to National Defense Fund rupees 10,000. So the section 80G has been classified into 4 categories. One, it is called as 100% deduction without limit, 50% deduction without limit, 100% deduction with ceiling limit, and 50% deduction with ceiling limit. So 80G has been classified into 4 categories. The first one, 100% deduction without ceiling limit, 50% deduction without ceiling limit, 100% deduction with ceiling limit, and 50% deduction with ceiling limit. So first one or first category, that is 100% deduction, means any amount which has been contributed by the assessee in the form of donation to any institutions. So that amount can be claimed as deduction under section 80G. So first category says that any amount which has been given by the assessee for a specified institutions, either it may be national level or state level or any disasters, earthquakes, if any happen, if we contribute any donations, then he can claim the 100% of amount as in deduction without any maximum limit. So they have given the list. If any donation which has been listed in that list, then it is eligible for 100% deduction without any maximum limit. And 50% which is related to Nehru and Gandhi family without any maximum limit, and National Drought Relief Fund. So it is eligible for 50% of deduction without any ceiling limit. And third category, we have 100% deductions with ceiling limit or maximum limit. So we have two plans or two deductions. One, it is called as family planning, promotions, and any amount which has been contributed for the Indian Olympic Association for the development of infrastructure of game and sports. So that is the two options we have. If any assessee has contributed to such fund, he can claim the deductions up to 100% with maximum limit. And next, that is 50%, which is nothing but any charitable institutions or any other institutions, temples or mosques. If any contributions has been done, up to 50%, he can claim the deduction with maximum or ceiling limit. So here they have clearly stated that he has paid donation to National Defense Fund rupees 10,000. So this fund will be categorized under the category 1. Means any amount which has been paid by the assessee for the national level or state level or any disasters or any earthquakes or any other things, then that amount up to 100% he can claim the deduction without any ceiling limit. So these deductions can be claimed under the section called as 80G. So 100% deduction without any ceiling limit. So 10,000 into 100%, 10,000 will be the deduction amount. Next, he has deposited rupees 50,000 under a scheme framed by LIC for maintenance of his dependent brother with disability. The disability is certified by the medical authority. So that amount can be claimed as a deduction under section 80DD. Means the 80DD says that any amount which has been contributed or deposited by the assessee in order to maintain or in order to take that amount in order to meet the maintenance of his disability person or the family member. And the disability has to be certified by the government doctor. So less than 40%, no deductions will be available. 40 to 80%, 75,000. Above 85%, 1 lakh 25,000 will be the deduction amount. So if you check the problem, they have not given the percentage regarding the disability, and the disability certified by the medical authority. So here we are going to assume that the disability percentage falling between 40 to 80 percentage, and we are going to take the amount of rupees 75,000 as a deduction amount. Okay, so such amount can be claimed as deduction under section 80DD. So calculate or compute is total income for the assessment year 1920. Assessee Mr. Rama, status resident, previous year 1819, assessment year 1920. Calculation of total income. So first one, business income, that is 1,55,000. So if you check that they have given the information regarding the long-term capital gain. So any long-term capital gain will not be added to the gross total income, and that amount will be added back after the deductions. So be careful. Any long-term capital gain and any short-term capital gain liable for the securities transaction tax, that amount will not be added to the gross total income. Such amount will be added after the deductions has been done. Okay. So here they have given the long-term capital gain. So we are not going to take that at the beginning. It will be added back at the end after making the deductions. So one, business income, we have taken 1,55,000. Second, we have taken short-term capital gain. They are not given any word liable for security transaction tax. So 15,000. So total gross total income, we are going to call them as other gross total income, because we are not going to add the, or we have not add the long-term capital gain. So it will be called as other gross total income, that is amount 1,70,000. Now from that we need to claim the deduction. So first one, deductions under section 80DD, that is the amount deposited by the assessee for the maintenance of the disability family member. So since they have not given the information regarding the disability percent, so we are going to assume that disability fall between the 40 to 80 percentage. So maximum amount is 75,000. So deduction amount under section 80DD is 75,000. Next, deductions under section 80G. So they only given the amount called as donation to National Defense Fund. So such amount is eligible for 100% deductions without any ceiling limit. So we need to check whether the deduction or the donation is classified under the ceiling limit or without ceiling limit. Based upon that, we need to do the calculation. So any donation to National Defense Fund or any national organizations or state organizations or any disaster funds, that amount up to 100% they can claim the deduction without any ceiling limit. So 10,000 they have contributed, 100% can claim the deduction. So 10,000 will be the deduction amount. Next, deductions under section 80GG, because he is paying the rent amount of rupees 4,000 in Bangalore and is not receiving any house rent allowances, and in Bangalore he is not holding or is not owning any house property in his name or wife or the sons or the daughters. So he can eligible or is eligible to claim the deduction under section 80GG. So deduction amount will be list of the following, that is 25% of adjusted gross total income maximum limit up to 5,000 per month. You can claim the exemption and rent paid minus 10% of adjusted gross total income. First, we need to calculate what is the adjusted gross total income. So, adjusted gross total income, we have taken the working note. So, of adjusted gross total income. So gross total income or adjusted gross total income equals to gross total income minus deductions except 80 GG. So whenever you are calculating any adjusted gross total income, so the adjusted gross total income will be calculated for two sections. One 80G and second one 80GG. Okay. So when you are calculating 80G adjusted gross total income, not to consider the deductions amount under section 80G, others has to be other deductions amount has to be considered. But when you are calculating the adjusted gross total income for 80GG, then the deduction amount of 80GG should not be considered, but the remaining sections amount has to be considered. So here we are going to calculate the adjusted gross total income for the section called as 80GG. So adjusted gross total income equals to total income minus deductions except 80GG plus casual income. So if there is any casual income, it has to be added back. So income we have calculated, that is 1,20,000. Correct? So gross total income is 1,70,000 and except 80GG, the deductions amount is 1,75,000, 80DD and 10,000 80G. So totally 85,000 is the deduction amount except 80GG. So 1,70,000 minus 85,000, 85,000. The balance will be 85,000. So that will be called as adjusted gross total income. So adjusted gross total income is nothing but gross total income minus deductions except 80G or 80GG. We need to check for which section we are going to calculate the exemption or the adjusted gross total income. Such section has to be exempted from the deduction, and we need to add any casual incomes. So now we got the adjusted gross total income. So first one, 25% of adjusted gross total income. So adjusted gross total income is 85,000 into 25%, will get 21,250. Next, maximum limit of 5,000 per month. So 5,000 into 12 for 1 year. So maximum is 60,000. You can claim the exemption. And rent paid. So he is paying the rent amount of rupees 4,000 per month. So 4,000 into 12 minus 10% of adjusted gross total income. So adjusted gross total income is 85,000 into 10% will get 8,500. So 85,000 into 25% will get the value called as 21,250. 5,000 into 12 will get 60,000 and rent paid is 4,000 into 12, 48,000. 10% of adjusted gross total income is 8,500. So 48,000 minus 8,500 will get the balance called as 39,500. So here we need to take the least of the following or lesser amount. So the lesser value is 21,250. So lesser amount 21,250. Now we need to minus the deductions amount. So other gross total income is 1,70,000 minus 75,000 minus 10,000 minus 21,250. The balance amount is 63,750. Now in the problem they have given the long-term capital gain. So already informed that the long-term capital gain has to be added back after the deductions has been done. So we have already claimed the deductions. So with that total income excluding long-term capital gain, because we have not added the long-term capital gain, that is 63,750, and the long-term capital gain amount 25,000. So total income will be 88,750. So this is the net income.